As the market is currently active, BigBear.ai Holdings Inc., trading under the ticker BBai on the New York Stock Exchange, is presently valued at $7.19. The stock is experiencing some downward pressure in today's trading session, reflecting a cautious sentiment among investors. This price action, however, belies a much more complex and turbulent narrative that has been unfolding around the company, a story of immense expectation clashing with a challenging operational reality. Many onlookers see BigBear.ai as a pure play on the explosive growth of artificial intelligence, particularly within the lucrative government and defense sectors. The allure of high-stakes contracts and the promise of cutting-edge technology create a powerful and optimistic narrative. But to truly understand the dynamics at play with BBai, we must look beyond the surface-level excitement and delve into the intricate financial and strategic crosscurrents that are shaping its trajectory. The reality is that while the potential is undeniable, the path to sustained profitability and growth is fraught with significant hurdles, a fact that the market is grappling with in real time. The common belief surrounding BigBear.ai is that its close ties to the U.S. government and its focus on defense and intelligence applications of AI provide a secure and ever-expanding revenue stream. The recent announcement of a partnership with SMX to deploy advanced AI technologies for the U.S. Navy's UNITAS 2025 maritime exercise certainly reinforces this perception. This high-profile engagement involving numerous allied nations seems to cement BigBear.ai's position as a key player in the national security space. However, a deeper analysis reveals a more precarious situation. While such partnerships are undoubtedly positive developments, they often represent pilot programs or project-based work, not the long-term recurring revenue contracts that are essential for stable growth. The market's expectation is that these engagements will seamlessly convert into larger, more permanent programs. But the reality is that the government contracting cycle is notoriously slow and unpredictable. This creates a lumpy revenue profile, with periods of significant contract wins followed by lulls that can spook investors and create volatility in the stock price. This tension between the promise of major government deals and the inconsistent nature of their realization is a central theme in the BBai story. Examining the stock's recent movement provides further insight into this dynamic. The daily swings in BBai's price are often driven by news of partnerships and contract awards, leading to sharp upward movements. However, these rallies are frequently met with profit-taking and a subsequent retracement, as savvy investors understand the long road from a press release to tangible, sustained earnings. Trading volumes have been notable, indicating a high level of interest and speculation in the stock. Institutional activity is also a key factor to watch. While there is a significant presence of institutional owners, including major players like Vanguard and BlackRock, their recent trading patterns will be crucial in determining the longer-term sentiment. An increase in institutional buying would signal a growing confidence in the company's ability to execute on its strategy, while significant selling could indicate underlying concerns about its growth prospects. The market's reaction to the company's latest earnings report was a clear illustration of this expectation-reality gap. While there may have been some positive headlines, a closer look at the financials revealed a more nuanced picture, with challenges in certain segments and a revised outlook that tempered some of the more bullish forecasts. This is where many retail investors, often focused on the top-line narrative, can get caught off guard, while more seasoned market participants are busy dissecting the details of gross margins, operating cash flow, and the all-important backlog conversion rate. For those considering an investment, platforms like Schwab Intelligent Portfolios or Fidelity can offer tools for a more in-depth analysis of these financial metrics, helping to separate the hype from the hard data. Options available through providers such as Robinhood or SoFi Invest also reflect the market's underlying sentiment, with the pricing of calls and puts providing a glimpse into the expected future volatility of the BBai stock. To fully grasp the current state of BigBear.ai, it is essential to understand its core business. The company operates at the intersection of artificial intelligence, machine learning, and data analytics, providing decision intelligence solutions to both government and commercial clients. Its offerings are designed to help organizations make sense of vast and complex data sets, enabling them to anticipate future events and make more informed decisions. The business is broadly divided into two segments: cyber and engineering and analytics. The cyber and engineering segment provides high-end technology and management consulting services primarily to the U.S. intelligence community and Department of Defense. The analytics segment focuses on providing data-driven solutions to a broader range of clients, including those in the commercial sector. Historically, the company has been heavily reliant on its government contracts, which, as previously discussed, can be a double-edged sword. While these contracts provide a certain level of stability and credibility, they also expose the company to the risks of government budget cuts and shifting priorities. Past performance and older reports show a company in transition, striving to diversify its revenue base and reduce its dependence on a handful of large government clients. The success of this diversification strategy will be a critical determinant of its future success. Investors looking to gain exposure to the AI sector through a brokerage account, whether it be a self-investing account or one with more investment help, should carefully consider the client concentration risk inherent in BBai's current business model. Platforms like Interactive Brokers offer advanced tools that can help in analyzing sector-specific risks, which is particularly relevant for a specialized company like BigBear.ai. Looking ahead, the future outlook for BigBear.ai is a tapestry woven with both significant opportunities and considerable risks. The primary catalyst for growth lies in the expanding adoption of AI across all sectors of the economy. The demand for advanced analytics and predictive intelligence is only set to increase, and BigBear.ai is well positioned to capitalize on this trend. The company's recent efforts to expand its commercial client base and forge international partnerships are encouraging signs that it is actively working to mitigate its reliance on the U.S. government. A key area to watch will be the development and adoption of its proprietary platforms, which could provide a more scalable and recurring revenue stream. However, the path forward is not without its challenges. The competitive landscape in the AI space is fierce, with both established tech giants and nimble startups vying for market share. BigBear.ai will need to continue to innovate and differentiate its offerings to stay ahead of the curve. Furthermore, the macroeconomic environment could also pose a significant headwind. Rising interest rates and fears of an economic slowdown could lead to a tightening of corporate and government budgets, potentially impacting the company's ability to secure new contracts. The expectation is that the sheer momentum of the AI revolution will carry companies like BigBear.ai to new heights. But the reality is that they are still subject to the broader economic cycles and competitive pressures that affect all businesses. Comment below with your thoughts on the biggest challenge facing the AI industry in the coming year. Do you think it's regulatory hurdles, data privacy concerns, or the high cost of talent? In conclusion, the story of BigBear.ai is a compelling case study in the dynamics of expectation versus reality in the stock market. The company's association with the high-growth field of artificial intelligence and its prominent role in the defense sector create a powerful narrative that has captured the attention of many investors. However, a more sober analysis reveals a company that is still in the early stages of its growth, facing the challenges of inconsistent revenue streams, intense competition, and a dependence on the often unpredictable government contracting process. The current intraday stock price of $7.19 reflects this ongoing tug-of-war between the bulls who are focused on the long-term potential and the bears who are more attuned to the near-term risks. The ultimate trajectory of the BBai stock will depend on the company's ability to successfully navigate this complex landscape, converting its promising technology and strategic partnerships into tangible, sustainable financial results. For investors, the key will be to look beyond the headlines and engage in a thorough and dispassionate analysis of the underlying fundamentals, a process that is essential for making informed decisions in the ever-evolving world of online investing. The allure of a disruptive technology stock is strong, but as with any investment, a clear-eyed assessment of the risks and rewards is paramount.